Hong Kong tech stocks went from crisis mode to comeback mode in the past 3 months, and most traders are missing it. While the world was distracted by tariffs and rate fear, the Hang Seng Tech Index quietly staged a major recovery. And I spotted 4 heavyweight Hong Kong stocks showing fresh bullish signals on my 1GT Pro indicator. In this video, I'll walk you through the exact chart setups, why these 4 stocks could be gearing up for even more explosive upside moves, and how you can actually trade these stocks just like any other stocks on the Singapore exchange. So make sure you watch this video all the way to the end. You don't want to miss it. Let's go. So the first Hong Kong stock I'll share with you today would be that of Alibaba Group Holdings, right? The code is 9988.HK, the one that's listed on the Hong Kong exchange. So later I'll share with you guys how you actually can buy this stock just like any other normal Singapore stock listed on the SGX, right? So what is Alibaba doing? Well, Alibaba is one of the world's largest e-commerce and tech conglomerate, right? It operates like Taobao, Tmall, and serving millions of consumers daily, right? So you can see this is the chart right now, trading about 155 Hong Kong dollars. You can see, right? I've kind of like drawn some lines, very key resistance level right over here, about 140 to 150 Hong Kong dollars. And I would say that since last year, the longer term trend for Alibaba has been up. All right, look at the red 100 days moving average line, the blue line pointing up, red line pointing up, red above the blue. So long-term trend has been up. Of course, in the short term, we did see quite a heavy selling somewhere in March to April, all the way down. Even in October, we sold down. So we did see a bit of a short-term weakness. However, buyers have started to come back, and we saw a pretty strong recovery all the way over here, and the most recent recovery somewhere from July to August seems to be playing out right now. So we have seen that the short-term trend, look at the green line gives an indication of the short-term trend. It started to like down, all right, and started to see a bit of a reversal somewhere around July, started to point up, flat, and now it has started to point up as well. So that's why potentially, right, we could see more upside in Alibaba because we have broken the 140 and 150 psychological resistance level as well. So long-term trend up, short-term trend is up, and what we could do is that we can turn on, I would say, this very powerful tool that I have, the One Good Trend Pro indicator, to see if there are any bullish or bearish signals that have came out, right, for Alibaba over the past few months. Let me turn it on, 1, 2, 3, pump. And let's see, right, so we can turn it on any asset classes, any stocks, even the markets as well. So let's see what it looks like for Alibaba. So very quickly, you can see that we had a couple of bullish signals coming out for Alibaba right over here. That was in 18th of July, to see a bit of recovery. The short-term trend turned up as well. And another bullish signal actually came in on the 1st of September right over here. And we started to push up a little bit already, right? So not too bad. We got more bullish confirmations coming in. We have broken the 140 and 150 psychological resistance level, right? So the question is, how can we actually buy this stock on the SGX, right? Like any other normal Singapore stock, you don't have to buy that one that's listed on the Hong Kong exchange and incur what we call foreign exchange fee and extra charges, right? You can actually buy the normal Singapore stock. And how do you do that? Well, you can buy what we call the Hong Kong SDR, Singapore Depository Receipts, right? Later I'll show you guys, right, what is the code for Alibaba Group Holding in terms of the SDR listed on the Singapore exchange, right? But let me do a quick currency conversion. You can see right over here, right, I've kind of like written this exchange rate right over here. So you can see that the price, let's say, you know, the price resistance at about 150. So 150 would be what we call a very key psychological resistance that we have broken, right, in terms of Hong Kong dollars. So $150, we can convert it to Singapore dollars. So $150 times the exchange rate of 0.16 to convert from Hong Kong dollars to Singapore dollars. And what we could do is to divide it by 5, right, to get what we call the SDR price. So there's a SDR to underlying ratio, 5:1. So we want to divide it by 5 to get what we call the Singapore dollar price of the SDR. And that would be about $4.80 in terms of the 150 Hong Kong dollars. Same thing would be like $4.48 for 140 Hong Kong dollars. So let's see, you know, how can we actually buy the SDR on the SGX. So I've logged into my trading account. You can see that this is the very stock that we talked about just now, Alibaba, right, listed on the Hong Kong exchange. The code is 9988.HK, about 154 Hong Kong dollars. But if you look one row down, you can see that there is this thing called the Alibaba space HK space SDR 5:1, right? The code is HBBD, and this is the one that's listed on the Singapore exchange. You can just buy it like any other normal Singapore stock, like your bank stocks and anything, right? So you can see the price is about $5.11. So I mentioned just now that we have broken kind of like the resistance at 150 Hong Kong dollars, and if you convert it, it'll be like $4.80 Singapore dollars. So you can see now it's about 5.11 Singapore dollars. So if the price to the dip slightly to near 480, 490, or maybe even $5, it could be a good entry, and that's where you could actually buy what we call the SDR of Alibaba, and the code, as I say, is HBBD. So you can go to any trading platform, just type the code HBBD, and you will be able to search for this Alibaba SDR. Let's move on to the second Hong Kong stock, and that would be Tencent Holdings, right? The code is 700.HK, trading at about 644 Hong Kong dollars right now. So you can see that we had a couple of bullish signals coming out, I would say, since like January, right over here. 3-1 GT bullish signal, all the way up. A bearish signal came out in April when Trump introduced tariffs, right? But what happens, right? A month later, we got a 1 GT bullish signal. Started to push up sideways a little bit. Another bullish signal came out somewhere in July, and we went up even faster. So I think right now the uptrend looks intact. Longer term trend is up. The green line that represents the short term trend is also still pointing up, and the bullish signals are still in play. And in fact, over the past, I would say like a few weeks, we have broken what we call the 620 resistance level, 620 Hong Kong dollars, and started to push a little bit higher. Right now, maybe 650 Hong Kong dollars will be a bit of a resistance that we are seeing some selling, right? So I think it looks not too bad, right? Not too bad. Anything on dips near like 620 to 630, 640, I think that's where potentially some bargain hunting can come back again, right? And how do we actually buy this stock, right, on the Singapore exchange? Well, as I say, right, you can buy what we call the SDR. So very quickly, you can do what we call a currency conversion to convert, like, you know, the price to Singapore dollars. So just take the price, like for example 650, or maybe like this support at 620. So 620 would be a support level. 620 times 0.16, that will be converted from Hong Kong dollars to Sing dollars, and we divide it by 10, right? So we divide by 10 to get what we call the SDR price, because the ratio is, you know, 10:1. The SDR to underlying is 10:1. So we're going to divide by 10 to get the SDR price, and that will be about $9.92. So let's take a look at, you know, how it looks like on the SDR right now. So this is Tencent Holding right over here. You can see that this is the one that's listed on the Hong Kong exchange right over here. 0700.HK, the price about 644. But if you look just one row down, that is where you can actually buy what we call the Tencent Hong Kong SDR, right? 10:1, and the code is HTCD. So it kind of like tracks the underlying stock. It's listed on the Singapore exchange. The price is about $10.63. So for example, let's say, you know, we are seeing support around like 10 Singapore dollars. So if it does dip to near, you know, $10, 10.20, 10.30, 10.40, right? Right now, the price is 10.63. So if it does dip a little bit to near the support in terms of the underlying stock, that's where potentially you can think about getting in, all right, on the SDR as it nears the support level from 10 all the way to $10.20 to $10.30 as well. The third Hong Kong stock you can put in your watch list for more upside would be that of Ping An Insurance, right? The code is 2318.HK, right? And it is now trading at about $56.30 Hong Kong dollars. So let me just go through very quickly. You can see that the trend for Ping An Insurance has been up since last year in terms of the longer term trend. Look at the red and the blue line, right? So I mean, you know, previously in 2024, it was like a bit of a downtrend, red line going down, blue line going down. Not good. You don't want to buy. You want to buy when there are signs of a refocus of the trend turning up, and that came in somewhere around like October, November last year. You can see the red and blue line started to turn up. Up to now, the red is still pointing up, blue still pointing up. So the long-term trend is intact, you know, pointing up right now. Let's take a look at the short-term trend. So short-term trend, we look at what we call the green 20 days moving average. Now you can see, right, the green line was like down in March, April when we had the tariffs news being announced, right? But somewhere around like May, you see, started to slope up, and we have triggered what we call 1 GT bullish signals right over here from like about 43, 44 Hong Kong dollars. Yes, push all the way up to around that $56.30 Hong Kong dollars. There are still no 1 GT bearish signals right now, so it still looks pretty good. And I would say that, you know, we are starting to see a bit of a consolidation, right, from maybe 54 Hong Kong dollars to that 58 Hong Kong dollars. Right over here, the green line is also starting to kind of like flatten out from up. You can see the past 1-2 weeks, it is now starting to flatten out, which just means a bit of a sideways consolidation in the short term. All right, so what could you do with this stock, Ping An Insurance? Well, you could actually buy this stock on the Singapore Exchange, right, by buying what we call the SDR. So before we talk about the SDR and the code, right, well, let me just do a bit of a currency conversion to see what would be the Singapore dollar price if you convert it from the Hong Kong stock to the Singapore SDR. So very simple. Let's say 58 Hong Kong dollars. We want to convert it in terms of the SDR price. You can take 58 times 0.16. All right, that will be converting from Hong Kong dollars to Singapore dollars, and then we divided it by 2, all right, to get the SDR price or the Singapore dollar price. That would be like $4.64. So like 432 to 464. That is kind of like the range right now, right, in terms of the Singapore dollar price. So let's go back to look at the SDR for Ping An Insurance. Okay, so this is Ping An Insurance right over here, 2318.HK. You can see the price is $56.30 Hong Kong dollars. But if you just look one row down, that is where we can see the SDR price, right? The one that's listed on this Singapore Exchange. So Ping An space INS Insurance space Hong Kong, SDR 2:1. So the underlying ratio is 2:1. 2 SDR to 1 underlying. That's why we want to divide it by 2 to get the SDR price. You can see it's around the $4.64 Singapore dollars. So the code is HPAD. So you can actually buy this SDR at about $4.64. So let's take a look at like the support level. Let's say it's about 430, right? So if it does dip to like 430, 435, 440, right? That would be a bit of a support level, right, in terms of the Singapore dollar price. So right now you can see it's like $4.64. So that's how you can do a bit of a currency conversion, right, from Hong Kong dollars to the SDR to see what is the price of the SDR and think about a potential entry there. So the fourth Singapore Hong Kong stock will be Semiconductor Manufacturing International Corp, right? In short, it's SMIC. And the one that's listed on the Hong Kong Exchange is 981.HK right over here on my chart, trading at about 63 Hong Kong dollars. So SMIC, I would say, is the world's third largest chip maker. In fact, it's China's largest chip maker, right? And it's kind of like a tech play as well. We've seen a very strong recovery over the past 2 to 3 months, right? So let's take a look at what has happened over the past few weeks. You can see, right? Well, we got what we call a 1GT bullish signal coming out right over here in June. So previously in April, we got a bearish signal and it starts coming down, right? Somewhere in January, February this year, got 2 bullish signals all the way up. So these bullish signals kind of like guide us on entry and exit as well. It's used as a confirmation to time our entry, to get in, maybe to get out as well if we see a bearish signal. So I don't have time to cover the whole strategy. So you want to find a little bit more about the entire strategy, right? The one good trend strategy, and perhaps how you could have a tool like this to guide you as well to get in and get out. Well, attend one of those free webinars. The link is right below the video. Check it out, right? Okay, let's take a look at this stock right here, right? So we can see we got a 1GT bullish signal somewhere around here. It was like about 40 Hong Kong dollars push up, and most recently over the past 2 weeks, we got a new 1GT bullish signal coming out as well, somewhere around 28 August. So it started to push a little bit higher, and it still looks pretty bullish right now in terms of the longer term trend and the short term trend. So longer term trend has been up since last year. Look at the red and blue line, right? Not too bad. Red going up, blue going up, red above the blue. Not too bad, right? The green line that represents the short-term trend, well, it was actually like down. Look at this, right? It was March. It was like down. All right? So not good. We don't want to get in. We're going to wait for confirmation of the reverse. And it did come, right? It did come somewhere in July. Started to point up. Well, we got a bullish signal. The green line also pointed as another confirmation. Let's see, is it still pointing up? Up. Yes, seems like the green 20 days moving average line, it is still pointing up. So long-term trend is up. Short-term trend is up. We got 2 1GT bullish signals that looks to be still in play. I don't see any bearish red signals of now. I mean, if we see like a bearish signal like this, then you might want to be careful. But right now, there is still no bearish signal. I think the uptrend is still intact. We are poised to hit even higher if we can break this very key resistance level. So what would be the very key resistance level? Well, right now, I think we're seeing a bit of resistance around the 65 Hong Kong dollars. 65 Hong Kong dollars, you want to convert it to in terms of the SDR price. Well, you take 65, so the SDR to underlying ratio is 5:1. So we want to do 65 times 0.16 and you divide it by 5 to get what we call the SDR price. So that would be like about $2.08 in terms of the resistance for the SDR. Same thing, like $1.76 in terms of this support at 55. So the range in terms of Hong Kong dollars would be 55 to 65 Hong Kong dollars, right? But if you convert it to the SDR, right, which I'll show you guys in a bit, would be $1.76 to $2.08. So like about 30 cents, about 30 cents kind of like range in terms of the Singapore dollar price. So we can actually go to think about buying this stock, not on the Hong Kong exchange. I mean, you could do that and incur what we call extra foreign forex fee, foreign currency conversion fee and all that, right? But if you buy what we call the SDR on the SGX, it's like, in Singapore dollars, it's like any other normal Singapore stock, right? And you can, kind of like try to get it maybe near the support dollar, about $1.70 to $1.80. So let's take a look at the SDR right now for SMIC. All right, so this is Semiconductor Manufacturing, SMIC. Right, you can see the price is 63 Hong Kong dollars, right? But if you look one row down, right over here, there is what we call the SDR for SMIC, and that would be SMIC's page HK SDR 5:1. So take note, right? The underlying, all right, in terms of SDR to underlying ratio is 5:1. So if you want to get the SDR price, you want to convert it from the Hong Kong stock to the SDR, we need to times the exchange rate and we divide it by 5 to get the SDR price, which is about $2.08. So the code is HSMD. You can go to any trading platform, type HSMD, and you will be able to pull out this SDR that's listed on the Singapore exchange. So you can see $2.08. So what would be the support level? Well, support level, I mentioned about 176. Let's say 180 to 190. If the price were to dip in terms of the SDR price, were to dip from maybe $2.08 to like 180, 190, 170, well, that could be a good entry as well in terms of entering near the support level for the SDR. So there we have it, guys. These are the 4 Hong Kong stocks I'd like to share with you guys today, and that will be Alibaba, Tencent, Ping An Insurance, and finally SMIC. So I hope you want to put them in your watch as well and check it out, right? Check out how you can actually buy these stocks on the Singapore exchange as SDR, Singapore Depository Receipts, which is so much easier. It's just like any other normal Singapore stock, right? So just doing this video to create more awareness, right, in collaboration with SGX to share a little bit more on Singapore Depository Receipts, in short SDR. So I hope you find this video useful as well. Go ahead to like this video, subscribe, alright? If you have not yet subscribed to my YouTube channel, go ahead to do it, right? That will definitely help out the channel. Thank you so much. So Joey here. I look forward to see you in the next video as well. And as I say, right, if you want to find out a little bit more about the entire One Good Trend strategy or the 1GT Pro indicator that gives an opinion on any stocks in seconds, any asset classes, any markets, right? Well, attend one of those free webinars as well. The link is right below the video. Thank you so much for watching. I'll see you soon.